firm. We specialize only in taxation, primarily high net worth individuals, businesses associated with those individuals, and estate planning. Plus, more than half of our work has international ramifications to it, one way or the other. People coming into the United States, leaving the United States, or businesses moving internationally. So that's our background. And with us today is Elizabeth Goss, who's an immigration attorney here in the Boston area, a nationally recognized attorney. She gets involved in bringing individuals into the United States. A lot of the characters that live around our area, the students and professors and high-tech and bioscience types of people. And she's also pretty active nationally in doing immigration policy, which is, as you may be listening to the newspapers and the radios, a kind of an interesting area these days. And Owen Jones is with Sheridan's in the UK. He's the head of their practice at Sheridan's on immigration. He also deals with high net worth individuals plus businesses, both small and medium-sized businesses and large businesses, moving people internationally and into the United Kingdom. So we have some pretty good immigration expertise today. They're going to present each of the sides of the pond, and I'm going to chime in at the end and give a little bit about the tax aspects of what happens to someone when they move from one country to the other. So with that, Elizabeth, why don't you take it over, put up your slides, and we can get started. Oh, and if anybody has a question, hit the raise your hand button, and we can respond if we're either unclear or you have a question about something. We'd like to have a Q&A at the end also, but with this group, we may be as efficient as we answer questions as we go along. So with that, Elizabeth.
Great, thank you. So yeah, thank you for having us today. So I want to preface with, we have to acknowledge a few things about the U.S. immigration system. We are a country of two minds. We are, all in on the rags to riches story, bringing yourself up by the bootstraps. We're a nation of immigrants. And at the same time, we have protectionist instincts in terms of U.S. worker protection. And that has been historically present throughout, since the turn of the century forward in our immigration system. I found a very interesting quote from Senator Kennedy, who is instrumental in his floor speech and arguing for the immigration law that we work under today, which is the 1965 Immigration and Nationality Act. And he said, quote, "This bill will not flood our cities with immigrants. It will not upset the ethnic mix of our society. It will not relax the standards of admission, and it will not cause American workers to lose their jobs." So I don't think that there's any difference. And the language is different, certainly. It's 1965, but those sentiments are still present in our country's thinking on immigration policy. And unfortunately, over the last 40, 50 years, the immigration policy remains a political football. So when you hear things in the news about how the immigration system is broken, we need comprehensive immigration reform, that is all true. And what that leaves us with is a 1965 law that's been tinkered with in 1990, again in 1996, and a little bit after 9/11, mostly with more punitive measures than positive measures. Our law, we operate under a law that's enacted by Congress. It needs to be changed by Congress. The law itself is interpreted by the agencies that implement and run the system. So U.S. Immigration Service, Department of State, Department of Labor, all those different agencies, they have wiggle room in terms of how they're implementing the law. And so what we have most movement on and traction on and positive momentum on is how agencies are interpreting this immigration law. But there are certain things that we can't change. So, and I think the biggest issue that people are not really recognizing in our system are the numbers. So the 1965 Immigration and Nationality Act changed the system and recognized that we didn't want per country limits. So we didn't want caps on nationality, but it did instill a cap. So in 1965, under the business immigration side, they only wanted 54,000 people to get green cards a year. Right? That was upgraded in 1990 to 140,000 green cards a year on the business immigration side. That's the number we're working with today. So that number has not changed since 1990. And it's even worse because that number includes not just the individual person who's getting a green card, but the count also includes spouses and children. So the OMB, the Office of Budget Management, reckons there's about 2.2 applicants on average. So that means we really give out 60 to 70,000 green cards nationally per year based on business immigration opportunities, right? So that's a drop in the bucket. And so that's something that is just a reality, and it's something that we have to deal with functioning under the system. Second thing the Immigration and Nationality Act of 1990 did was establish the premier business visa we have to use to get professional workers in the United States to work. And that was capped at 85,000 in 1990. Under the Clinton administration and the waning days of that administration, there's a temporary doubling of that number for a few years. It was a negotiated agreement, but that went away, and we haven't seen those numbers since the end of the 2000s, or the middle of the 2000s. We know that at least, well, I'll get into the H-1B numbers in a minute, but these are the real constraints in our system are the numbers that are available on the business side. So when we're thinking about I can't move my slides. Here we go. When we're thinking about pathways into the United States, we have under the system 2 tracks. So we have the temporary track, so we call them non-immigrant visas. So these are reasons why people are here, specific reasons based on an employer sponsor most of the time. The only exception to that would be artists and entertainers that can potentially have an agency relationship, but someone has to sponsor someone in for a specific reason, for a specific time period, under a specific set of rules. So these are all the temporary visas. And then we have an immigrant visa system or green card system. And there are a different set of rules for pathways to permanent residence. The pathways to permanent residence, with the exception of marrying a U.S. citizen, if you are married a U.S. citizen, that is the fastest way to come into the country. It's not fast if you're abroad. It could take a year or more, but if you're inside the country on another visa status, it will take 6 to 9 months if you're in the Boston area. New England area, that is the fastest way to get a green card. I don't recommend it unless it's a legitimate relationship. But for everybody else, we're really looking at a minimum of 2 years. For somebody born in India, it could be 10 plus years. And the reason for that is those numbers are given out not based on nationality quotas. So we don't say there's 5,000 for the UK, 10,000 for Lebanon, 3,000 for Mexico. It's based on category of workers. So it sets ceilings. You can't have more than 7% of any one country taking a specific category of numbers, right? It's meant to divide evenly across the spectrum. But what it does, when that act was established in 1965, there wasn't an understanding of what the immigration numbers we're seeing today. There wasn't an understanding that most of the immigration would actually come from India and China and not from the Western Hemisphere. So there's a complete mismatch of the establishment of this rule, the numbers, and the theory behind how the system was thought it would be operated, and the reality of what we're looking at today. So without more numbers, the system is just going to continue to I think ultimately it will break, it will cave in, and the lines will be so long it just won't even be rationally, it won't be rational for companies to try to operate and under the system. There's 2 ways typically people come into the United States. About 50% of what we see for the U.S. workforce and foreign nationals, most of them come in through a student visa of some kind. Right? So through universities, either as a student, maybe as an exchange visitor, researching, that kind of thing. So that's the most common first step pathway for somebody to come into the United States. There are people, and then there's entrepreneurs, people who come from abroad to either establish a brand new company, or people who come in to potentially look at, maybe they're coming in first as sales representatives, and then ultimately, I think it was mentioned earlier, getting to the point where our law doesn't specifically define what work is under the immigration law. So we have a variety of case law and some other interpretations that tell us once somebody is working productively in the United States, so doing anything billable, right? Not just meeting with clients and signing deals. Once you are doing productive work in the United States, that's really where you should have a different visa status. You really shouldn't be here on a business visa. right? A temporary business visa, the B1, engaging in such activities. So that's another conundrum with our system. There's not a clear definition of when somebody might be violating that rule. Right? It's a fact-based test, circumstance-driven. So when we're thinking about these temporary options for people, as I said, the most common way is for students to come in. F1 student visas everybody gets 1 year after their degree program. So that's typically how people start working in the United States. If they're STEM majors, they get a two years additional if they work for a company that's E-Verify, that's an E-Verify company. So there's a potential there of 3 years of work authorization for an employee just under the student system in some cases. And then we have this H-1B professional worker that I mentioned that is quota limited. So we run a lottery for those visas every April. And the theory behind the F1, the STEM extension, part of the reason why this was granted a few years ago was to give those STEM workers also an advantage to have multiple years of trying for one of those lottery numbers. Last year, there were 350,000 applicants for the 85,000 slots. The year before, there were 500,000 applicants for the 85,000 slots. So the system for the lottery went electronic a couple of years ago, and the government didn't foresee, I don't know why, but they didn't foresee a whole cottage industry that sprung up they're filing multiple applications for the same worker. And so they caught on after the first year, and they made a few adjustments this year. So you saw a lower number of applicants this year. But I don't think 350,000 is too far off the mark. So before the electronic system, we were seeing anywhere from 200 to 250,000 applications for these 85,000. So again, this is it's really limited in terms of the number. But once you get a quota number, that is a way for somebody to stay here temporarily in the United States. So when we work with companies, as I said, usually we work looking at the student on their way in. If they don't meet the quota number, what a strategy might be, especially for a multinational corporation, is to send that employee abroad. So if you have a worker who has worked for your foreign parent or subsidiary or branch abroad for 1 full year physical presence, and been physically present in that country overseas. And that means anybody, if you have a sales team, again, who's come in for a couple of weeks at a time, those couple of weeks in the United States are taken off the top in terms of physical presence abroad. A company can transfer them back into the United States. So these are for multinational executives, managers, and specialized knowledge people. And so one of the strategies we work on with companies is when clear and transparent information for their employees is key. Because sometimes you just don't get lucky. You might not get lucky and get a quota number, but the option might be for you to be transferred abroad for a couple of years. And even though the standard is 1 year abroad, in reality, it's going to be more like 18 months to 2 years at a minimum, just because of what's required to document and how long it takes to get evidence together and the restraints in terms of how the government is scrutinizing this category. So setting clear expectations, hey, look, it's not just 1 year, it might be 2 years. And how does that fit into the operational plan? Another thing we might look at for an option is persons of extraordinary ability, science, education, and athletics. This would have to be somebody that has some kind of traction publicly for their work, or privately, but privately independence in terms of, government organizations, maybe if for business, if somebody has some kind of recognition as a turnaround, somebody who's an expert in mergers and acquisitions and can document that in a variety of industries or through a variety of companies, that kind of thing we look at. There's been some expansion in the Biden administration for entrepreneurs. We have the traditional E1, E2 trade visas. The UK has a trade agreement with the government. You have, this is reliant on the company that's coming in or being established having at least a 50% ownership stake by the UK national. And anybody coming in under this trade visa has to have UK nationality, has to be a nationality match. So you couldn't bring in your Spanish employee under an E2 designation for a UK company. It has to have a nationality match. There is something called International Entrepreneur Parole, which the Obama administration kicked off. Our firm actually had the first approval. This was during the Trump administration, but it was a long, arduous process. It took 1.5 years for us to get that. that approved. Then there was a big period of time where there were some applications being filed, but they weren't being approved. And just this summer, and the Biden administration has been really, they have been proactive in reaching out to the business community at some level and trying to open up this particular type of application for entrepreneurs. It requires an investment minimum of $500,000 from a known angel investor or VC fund. They have been working on the timeframes. They've gotten it down to about 6 months now, so it's better than a year, but it's still too long. And until I think they start to get their adjudication trends in a more reasonable time frame or add premium processing to it, which you can do in certain categories, I don't think this is going to be a viable option for entrepreneurs. We have the trade visas. So if you're Canadian, Mexican, Australian, Singaporean, or Chilean, there are options for you under the trade visas. And then there's, we do have for artists and entertainers, there is a visa called Artist of Distinction. But even the artist visa, you need to have somebody sponsoring you. It could be an employer, it can be an agent. The government is looking for future work cemented in contracts in order for us to sponsor those kinds of visas. So those are the pathways for temporary. For permanent residents, we have several pathways. The most common is a labor certification, and this is a market test to prove there's no displacement of a U.S. worker. And then we have the individual. There's two options for people who maybe to self-sponsor, which is person of extraordinary ability. Those are really people who can document sustained national and international claim and national interest waivers. Biden administration has stated that people with STEM majors have a plus factor under this category. And really, the Biden administration has plus factored STEM majors across the boards in immigration in various ways. So that's one of the ways that they are, aiding in getting some of these applications through. But as I said before, our legal permanent residence pathways are at least 2 to 7 years, depending. And again, I'll close out just by saying a few things here. Administrations matter. Who is in the White House controls who the top people at agencies are, and those are the people that get to interpret the statute. So if there's a pro-immigration administration, we get clarifications on policy memos, we get additional benefits, we get identification of positive factors for immigration benefits. But all of these memos, all of this progress we've made over the last few years can be taken away by the stroke of a pen. They're only memos. So they can be replaced, they can be rescinded, they can be reinterpreted. The other thing that non-friendly administrations can do is clog processing times. So there's no, other than the categories where you can pay the government $2,800 to process your application in 15 business days, there's no requirements for the government to be processing them under any time constraints. The State Department, when somebody goes for a visa abroad, right now, the majority of visa applications for business, not tourists, but for business-related people, they're waiving interviews, in-person interviews. That's a memo. That's a policy of this government. That can be changed the minute a new administration comes in, and then that would force everybody to go for in-person interviews, which again would clog the system. So there's lots of ways that things can change in terms of processing times just with the change of administration. So these things matter. And I'm going to turn it over to Ken to talk a little bit about the tax implications.
Thank you, Elizabeth. In the United States and anywhere in the world, we kind of come to the same way of looking at people as they come into the country. And as you get more involved in the country, and I use the word involved by how you're there, both from a time point of view and contextually how you're in the country, is to a great extent going to affect how the laws are interpreted. Now, the laws we have in the United States coming into the United States are controlled by a treaty, first of all, and secondly, by our internal laws. But the treaties override the internal laws in certain areas. and especially in the area of individuals moving into a country. If you're coming from the UK, for instance, and you make a transition to the United States, you're no longer taxed in the UK. And most of the world follows those same types of rules. There's one major exception to that, which we'll talk about later. But you're no longer taxed in the UK, and you're only under the US tax system. So you're only subject to one level of tax. But how do you get there? And I think Elizabeth pointed out pretty well in our immigration approach, people have a tendency to come into a country on an interim type basis. They're exploring, they're coming in for their company, they're going to school here. There's an exemption for people in school from being tax resident, or they're doing some other types of approaches within the country. So under treaties that we have with most countries, dependent employees doesn't mean you're a dependent. It means that you're working for someone as opposed to being an independent employee, although similar, like a self-employed person, although similar rules apply to independent persons. But under the treaties, we have 183-day rules. So if you're in the United States working for a UK company and you're coming here to explore the market, and maybe you're actually doing sales, and maybe you're actually meeting with people, maybe you're setting up a network, maybe you're setting the ground for setting up a subsidiary in the United States or whatever. There's 183 days. If you're not here in a 183-day period, and you're paid by the foreign entity, and there's no chargeback to the activities in the United States, then you're not subject to the US tax bill. You don't become tax resident, or you don't become subject to tax on the work you do here. And that's an interesting concept that people don't really understand because it doesn't really make a lot of sense. But we have what's called sourcing rules. And sourcing rules allow a country to tax income that's sourced to their country. So when I have people coming into the office and I say, you're doing US source income because you're working here, they say, no, my income's sourced in the UK because that's where I'm being paid from. Well, it's not where you're being paid from, it's where you're doing the services. And that's a concept that is foreign. For instance, I'm in Newton now, conceivably doing work. I have US source income. Owen is in the UK. He's doing work there. He has UK source income. So that's what we look to. Now, if we didn't have the treaty protecting us, then that US source income would be subject to tax as soon as you earn more than $3,000. So you'll be subject to a non-resident US income tax return reporting the income that you work here in the United States. If you do get the protection of the treaty, you have to file a tax return to claim it. So just keep that in mind. There's also issues regarding retirement plans and things of that sort. The UK treaty is one of the best treaties we have. It was done in 2020, 2002, 2001, and it covers retirement plans in a very good way. That retirement plans are not taxed here in the United States if you have them back in the UK. And that's pretty important because our retirement plan laws, which are very well developed, only relate to US retirement plans. So a UK retirement plan is looked at as some sort of trust or something. It's not a retirement plan from our point of view. But we do have the ability to respect their entire retirement plans because of the treaty, and you do have to claim that benefit on your income tax return also. In other cases, there may be an issue when someone is here in the United States for a longer period of time beyond the treaty protection as to whether or not they're subject to tax in the United States. So there's another provision in our treaties which is called a tiebreaker test. And it basically looks to where your center of vital interests are. It's a cascading type of test but it looks to where your central vital interests are as to whether or not you're still a UK resident, even though you're here beyond the 183 days, and you shouldn't be taxed here in the United States on your worldwide income. But you may be taxed in the United States on US source income under the tiebreaker. But moving away from the treaties a little bit and into the law, assuming you're here over the 183 days, there are two tests that we have under our internal laws. One is the fiscal presence test, which means you're located in the United States for 183 days during a tax year, or you're in the United States for 183 days, counting 100% of the days this year, 1/3 of the days the prior year, and 1/6 of the days the prior year. If you're come in under that test, you're going to be subject to tax. So let's say you have 120 days in the United States for 3 years in a row, you're going to have more than 183 days, and you'll be subject to tax from the first day you come into the United States. That can be overturned by what's called a closer connection test, which is similar to the tiebreaker test, but you have to say that your closer connections, your family, your school, your church, your bank accounts, your investments, your home, things of that sort are back in the UK and not in the United States, and you can avoid being taxed on worldwide income. So we're looking at the difference here between being taxed on US source income or falling into the trap of being here in the United States too long of a time, and everything that you own around the world, all your investments at home, any businesses you have at home, or anything of that sort are taxed in the United States. The second test is a green card test, which is you become a landed immigrant. You all know it's not a green card, it's a white card, but it's called a green card. And if you get that green card from the first day you enter the United States, you become tax resident on your worldwide income. So we have objective tests under the treaty for under the tax law for fiscal presence. We have an objective test for the green card. We have treaty protections if you're here just as an intermediate visitor, an interim business person. We have a tiebreaker test that may be able to get you out even though you're here under the fiscal presence test, or even if you have a green card under the tiebreaker test, you can still not be not subject to tax on your worldwide income under the tiebreaker test. And then we have plans, retirement plan issues that are very helpful. One thing that Elizabeth said, she said that somebody could be here working and entering into contracts on behalf of the companies that they're working for back at home in the UK. And if they're under the 183-day rule, either the fiscal presence test or under the treaty or even the tiebreaker test, they may not be subject to tax here personally on their U.S. source income. But by establishing contracts here in the United States on behalf of their employer, they may be creating a permanent establishment for the employer in the United States, and the employer will be subject to tax. So I bring that up because Elizabeth mentioned it, and I thought that that was kind of an interesting point. The last thing I want to say is a warning. The United States is a little nuts about reporting everything that anybody has anywhere around the world that may be some sort of a financial asset. Any types of investments, trusts, corporations, banks. We have a whole cadre of rules regarding offshore banking under both the Treasury Department, which is something called a Foreign Bank Account Reporting Form, and then something that came in the 2010 law, which is under FATCA, which is the Foreign Account Tax Compliance Act, where you have to report all offshore financial accounts on your tax return. If you get a gift from outside the United States, if it's over 100 grand, it has to be reported. 25% of that gift is subject to, it'll be a penalty equal to 25% of the gift. Corporations, partnerships, anything that you may own that's a business of any sort. And there's different types of filing depending on the ownership, which are way beyond the concept of this program. But you have a filing requirement for corporations, partnerships, and trusts. So anybody coming here, the first thing you should do if you're going to be coming here on a if you're going to planning on becoming here on a permanent basis or a long-term basis, you should sit down with somebody and get a good idea of how you should put your house in order before you get to the United States, before you wind up becoming subject to some onerous tax rules, which include passive foreign investment companies, which are basically mutual funds that you buy out of your investment account back in the UK. These mutual funds are taxed with penalties on them if they're not dealt with correctly when you get here, or if you don't sell them before you get here. So with that warning, and to be very careful on any financial investments you have when you come under our net, I'm going to turn it over to Owen now, and he'll tell us how easy it is to get into the United Kingdom.
Right. Thank you, Ken. That was really good stuff, and thank you, Liz, as well. Some really, it does strike me that many of the issues that businesses face coming into the UK or coming into the US are, very, very similar. We're looking at this juggling act that governments play, whereby they really want to encourage direct foreign investment. They really see that's a good thing. I think most people in most countries, that sounds like a good thing. Certainly is. It's bringing in taxes. It's bringing in...
Owen, there, somebody's having a difficult time hearing you. Also, if you could put those.
Okay.
Yeah.
Sorry, I'm trying my best here. I'll speak up a bit. Hopefully you can hear me.
Yeah, if you could do that, that'd be helpful.
Okay, thanks, Melissa. Yeah, so what we're faced with internationally, I think, are the same competing political juggling acts that governments are trying to take place with the people who vote them in. And in the UK, at least, it's an incredibly political subject. And I think we can contrast how quickly the UK moves with how slowly it seems that the US moves. And I'll bring those concepts out as I go. I work here at Sheridan's, and we're a multi-service law firm. We're based in the centre of London in Soho. The only area we don't do is tax, and I think but every company needs a Ken, I would say, because tax ultimately does drive a lot of the way in which we structure people coming into the UK for the first time, or companies coming into the UK for the first time. There are something like 80 immigration routes for the UK, and we cover all of them other than asylum, which is its own lovely subject matter that we stay away from. But most of the time we're dealing with businesses, people coming into the UK for the purpose of work, and working with usually the business owners to bring in the best international talent, or indeed poach the best international talent who are already working in the UK for their competitors. And when we're looking at the solutions, yes, there are many different routes covering entrepreneurs and innovators. What we often find is that they're actually seldom used because there's problems with those routes. The routes that are really used by businesses are all to do with sponsorship. They're all to do with licensing. And this is the idea that a business presents itself to the UK government department called the Home Office and says, here we are, this is what we do. Aren't we great? We're paying tax, we're employing people. Can you give us this license to allow us to bring in overseas nationals to support our businesses? And so when we present these applications, it's very much trying to showcase the businesses that we work with to make them stand out from the thousands of applications that the Home Office has to deal with. And we're fortunate enough that we deal with some excellent clients, and usually we are successful in what we do. I think there's a lot of rhetoric out there when we look at the concepts of sponsorship, how a business gets sponsored and how difficult it is. But there's definitely a pathway there. And usually when we're advising clients for the first time, how do we do this? How do we make this work? How do I bring in my CEO, my sales director, my games designer? Usually the answer is yes, we can do this, but we just need to build up the pattern. We need to get the license, and we need to bring people in the right way. There are various concepts that we play with here, and like many countries, the UK has stratifies different jobs and says, okay, if you're coming in with jobs at this skill level, yes, this is an appropriate job to be sponsored by your UK business. However, if it's at a lesser skill level, then we're not interested in sponsorship. And likewise with salary rates, they use salary rates to say, okay, if you are bringing in your sales director, okay, this must be paid a minimum of maybe £55,000. If you're bringing in an IT specialist, maybe that salary is at around 40,000. So what we're looking at is, can we hit those minimum skill rates? Can we hit those minimum salary rates? And luckily, certainly in the south of England, where most of our clients are based, you know, we don't have problems with those salary rates or those skill levels. And again, usually the answer is yes. And so how do we do it? Well, I'd say that still, if we look at the numbers coming to the UK, still by far the most are coming into the skilled worker category, which used to be called Tier 2 General. And over the years, this has developed, first came in 2008, and has probably had too much success for some politicians and some of society. But I would say it's been a very successful route. It's a long-term immigration route. So it's one that if you are the individual coming to the UK, often you will want to be a skilled worker rather than another category, because after 5 years, it can potentially lead to indefinite leave to remain, which is equivalent to the green card. And indeed, you can then, if you wished, get a British passport after a further year in the UK. So often we're working with people, their families, we're bringing them to the UK, and we're going on an immigration journey with them and their businesses. Contrast that route with the global business mobility route, which used to be called intra-company transfer route. It's now got a snappy title, Global Business Mobility Senior or Specialist Worker is the main category here. And this is a time-limited visa only. And unlike the L visa in the States, this usually requires the US employee to have been working in the States for a year before they come to the UK. There is a major exception to that, and that is where they're on a salary of £74,000 or more. Then we can avoid that 1 year qualification period. So sometimes even when that global business mobility option is there, we would still say, okay, yes, you have been employed for more than 1 year, you're in a senior role, but you know what? Let's bring you in as a skilled worker. Let's give you that options, because even though it might be a 2-year assignment, actually, who knows? You might like it. You might want to bring up your family in the UK. So there's certainly tactics that are needed when we're going about choosing the routes we're going for. Within global business mobility, there's a very important route that came in 2 years ago called UK expansion worker. And this is the concept of, if there is no footprint for a US business or any overseas business in the UK already, then bringing them in as a UK expansion worker is I'd say it's what the government are trying to push companies into now. And the idea here is that, okay, you come in, you send in your senior employee who's got experience with the company, he's got the methodology of how the company is successful, sets it up, get a 1-year visa, convert this sponsor license, this expansion worker sponsor license into a full skilled worker visa, and then potentially bring others to the UK from the US or worldwide. There's a few downsides to the expansion worker visa, which if we had longer, I could get into. But sometimes, needless to say, we try and skip it and we try and move straight to skilled worker or another immigration route, simply because of, and usually that's around timing, that downside, and the cost and the preparation time of it. But certainly, I think it represents the future. I know the government's trying to push it, and I know the government is maybe trying to take away from the skilled worker route. So we'll see how that develops. I should say there's lots of other subcategories of sponsorship. Creative is the area that we at my law firm do a lot of. We're known for our work in the entertainment realm, so it's TV, film, sports, theatre, modelling, tech to some extent. It's got its own rules and regulations. These are, again, time-limited visas. But most of the time, if you are coming in for a show, for a theatre performance, for a tour, then creative is going to be your answer. There's a whole other 70-odd immigration categories out there. The one that I'll just say a moment on is the visitor visa category, because again, what every country wrestles with is what can you do as a visitor when you're here in the UK? Yes, you can come for meetings, negotiations, site visits, but when does that slip into work, and when do I need that work visa? And I should say that's a really political question. There's been some developments on that this year. It's becoming slightly more business friendly, but only slightly. And it's really easy to get it wrong. And so we do a lot of advice around what we can do, how we structure a visit, and what we don't want to do. So anybody wants to speak about that in more, I could speak about that at length. Okay, we'll have a look at the next slide. What's going on in 2024? Well, politics. We've had 14 years of a Conservative government in the UK. And I'd say that, and since that time, in fact, since I've been an immigration lawyer, in the year 2000, we've had immigration becoming a political subject for the first time, and we've had a one-way direction of travel to a more restrictive system, to at least governments who want to be seen to taking more control of immigration and numbers of people coming to the UK. I think there's a lot of rhetoric here. There's a lot of sound bites. The reality is that the UK has, throughout this time, remained very, very open to businesses from overseas, very, very open to overseas nationals. And whilst the politicians have spoken a tough game, actually from the business point of view, we're always able to get what we need to be done. It's just a matter of time, cost, and strategy. So I'd say that remains the same. What's just happened is that before the Conservative government left us in the start of 2024, we had a 5-step plan for migration. And this was because the net migration number for the UK hit an all-time high. So net migration, more people coming and minus the people leaving, and it hit 750,000, which is fairly small beer, I'd have thought, from a US perspective. But for us small Brits, that's quite a number. And politically, the government wanted to be seen to doing something. Now, actually speaking, you know, I'm obviously pro-migration, I'm pro-business migration. Actually, some of those numbers were artificially inflated through Afghanistan, through Ukraine, through various other international crises. But nevertheless, we had a 5-step plan implemented. What's happened? Basically, they've shoved the salary rates up by about 50%. So if you want to bring anybody in, then actually, you know what, you need to pay a bit more. Again, in the London bubble, in the south of England, is this stopping the numbers? I don't think it is. I think ultimately these salaries are still being paid. It's not going to really get them where they want to be. I think the areas in which it's really hurting are healthcare and care, which is, you know, kind of as a country shooting ourselves in the foot, because we need these, you know, overseas nationals to help look after our sick and our old people. There's been restrictions on students. No longer can students bring in their wives, their partners, their children. Care workers can't bring in their dependents. Again, very, very politically sensitive stuff. Again, to my mind, unnecessarily restrictive and limiting for us as a country. And indeed, there's restrictions introduced on UK nationals who want to bring their spouses to the UK from overseas. Again, introduction of financial requirements, upping the amount of money that I must show that I own and I earn if I want to bring in an overseas partner for the first time. So incredibly politically sensitive, and it will continue to be. I think, you know, if we look at what's going on the ground in terms of the immigration authorities, this is the law. And this can change incredibly quickly, because we don't need an act of parliament. We just need a government to change the immigration rules. And not only that, but the instructions to the immigration enforcement teams are really, really important here. So at the moment, what we've seen in 2024 is an uptick on the amount of visits to sponsors and enforcement action taken against them. And we've seen more fines issued to businesses for illegal working. So I think we've got two things. We've got the law and the actual practice on the ground. Both of them are making it slightly more difficult, but you know what? It's still a very, very attractive country to come to. Yes, we've got our problems like any country. Brexit, what were we doing, frankly? But you know, I think the English language, certainly for the US, is still a major draw for US businesses wanting to base themselves in London and the UK. Okay, I'll have a quick look at the next slide, which is the future. What have we got? Well, I've got the irony of Brexit. Actually, Brexit, while we as a country said the end of free movement, no longer would a French, Spanish, German national be able to come into the UK and work here without restriction. That led to actually the end of a few restrictions on business immigration. We had an immigration cap. There was a cap on numbers, which was a moving cap, but it was a cap nevertheless. We had a resident labour market test. We had to prove that there was no British national who could do the job before we could bring in the overseas national. Those two things have fallen away directly as a consequence of Brexit. Are they going to come back is the big question. We've got a new administration. We've got a Labour government in power since July. We had, in fact, today, the new Labour law was published, and lots of my colleagues here were poring over the new Labour bill. That doesn't concern immigration, but what we saw in the manifesto were suggestions that we may see the reintroduction of a resident labour market test. We may therefore see more hurdles for business to overcome. You know, so from my perspective, actually what we could be in for here is a lot of the same language. Meet the new boss is the same as the old boss to some extent with the political parties' attitudes towards immigration. We're still going to see a lot of rhetoric about control, rhetoric about limitation. But from a business perspective, I think we shouldn't lose sight of the fact that the answer is usually yes, we can do it. Yes, actually, it can be relatively swift. It's the cost with the UK and the ever increasing government fees that they impose on us. But you know, the UK remains open for business, and I think that we should take what our politicians say with a pinch of salt when it comes to actual changes to business immigration law. So yeah, I'll end. I could probably say more on that, Ken, but maybe I'll pass over to you to have a few.
Go ahead. Why don't you finish up and then I'll take over. We have some time.
Okay. Yeah. Well, as I say, I mean, what concerns me about the direction of UK immigration law just at the moment is that there seems to be a movement to taking away the entrepreneur routes, the innovator routes. They're just not fit for purpose. And it's a lack of understanding from the UK government of how we should make those routes available, but prevent them being misused by those people who wish to pull the wool over the eyes of the government. There are a lot of bogus companies seeking to come to the UK, but there's also a lot of brilliant companies. There's a lot of brilliant people trying to establish business. And so one thing we do a lot of is on the lobbying side, whereby we're trying to speak in Parliament and persuade stakeholders that actually what we need to do is make these routes viable and workable rather than remove them altogether. Because at the moment we've got a reliance on the sponsorship routes, which I think takes away the opportunity for lots of the brilliant people coming out of our universities to actually establish their companies in the UK in the first place. So I think there's more work that's needed there in order to you know, help the UK economy flourish and be, you know, take advantage, frankly, of, you know, all of the great people who study here, and the UK still remains a very attractive destination worldwide for migrants.
All right, thank you, Owen. That was very interesting. Yeah, I think both of our countries realize that the highly educated individuals, especially the ones we produce here in Boston and the ones you produce in London, are very valuable to the economy, to the country, to keep them as part of that. When you have a non-US person studying at MIT and Harvard or at the London School of Economics, you have non-UK people, in Cambridge, you want to keep them there doing their work. And one thing that we see here in Boston quite a bit, obviously, as you all know, is to get really close with these types of people. Turning now to a U.S. citizen going to the United Kingdom, we remain fully taxable in the United States. Unlike every other country in the world, there's some rumor that there's an island somewhere in the South Pacific that has the same rule. But everywhere in the world, people, when they leave the country, are no longer taxed there. United States, they remain taxable. And this has always been a drawback, especially if you go back 20, 30, 40, 50 years ago, when we were trying to sell our goods in Saudi Arabia, trying to sell our goods in Europe or somewhere else. And I think, as both of our speakers today have alluded to, it's more valuable to have someone from your company, your country, selling those goods and that's familiar with the company than it is to try to hire and train somebody locally. So this has always been a problem, political and policy problem with the U.S. tax law. We'll get into how we get around that in a moment, but I'll reiterate again what I said about coming from the UK to the United States. We still have the same tax treaty protections, the same retirement benefit protections, the same tiebreaker rules. In that treaty, they work both ways. So I can go to the UK and I can work for my company, setting up business, doing whatever, negotiating, meeting people, setting up the network of our business. Again, the 183-day rule applies. I'm not going to opine on UK internal tax law, but I believe there's a 90-day test in the UK. If you're there 90 days, you become subject to their taxes. And so that is all of those treaty protections regarding retirement plans. If you go over and your retirement plan is here in the States, you're not going to be taxed in the UK on it. Contributions to it won't be taxed. So we have those same protections. I should add that there's also an issue regarding Social Security as opposed to income taxes. Obviously, people working in the United States are under U.S. Social Security. UK people working in the UK on the UK payroll are subject to health insurance, similar benefits and taxes. It's called a totalization treaty, and that totalization allows an individual to be working.
So we still move forward with the signage, right?
For up to 5 years and not be subject to the local.
Well, why don't we, do you want to do a call between the three of us?
Someone's speaking. Could you mute your line, please?
Yeah.
So, so we have what's called a totalization treaty. You have to apply to Social Security for it. You get a certificate of coverage, and then that goes on the payroll in the UK, and they won't assess you national health insurance taxes. And likewise, in the United States, you get a certificate of coverage and you can avoid US Social Security for up to 5 years. So there's some benefits there, but it's only a 5-year savings. So what does the United States do to protect its citizens from double taxation? Well, we created two things. One is foreign tax credits, which are pretty well known around the world, but much more important in the United States when you're subject to tax on worldwide income for your citizens, and the Section 911 earned income exclusion. The earned income exclusion only applies to earned income, and it has two tests to it. One is that you're physically present in a foreign country for 330 days in a 365-day period. So you have to really be out of the United States for more than, you can't be in the United States for more than about 31 days in order to get the coverage of that test. And if you're in the United States for part of a day, that part of a day doesn't count. Or you're a bona fide resident of a foreign country, which means you've moved to that country, you're a resident of that country, and most importantly, you pay taxes to that country if they have a tax system. And what is provided under this has changed over the years. It's politically kicked around for a long time. a long time ago. But since probably the 1980s, the late 1980s, it's been about the same type of system, which is you get an exclusion for the first, now it's, I believe, about $108,000 of earnings, so you're not taxed on it. And you also get an exclusion for housing if it costs over a certain amount that's baked into the tax law as to what that amount is, about $15,000, $20,000. So you get an exclusion for both housing and for your earned income. That's very valuable in places like Saudi Arabia or a country where you have very little tax or a very low tax rate. Because what happens is you lose your tax credits that are paid to the foreign jurisdiction. And also to now, which has happened in the last 8 years, you have to put the earned income exclusion back in the tax, into your tax base. You compute a tax on that base, and then you pull out the taxes on the 108,000 plus the housing expenses. So basically what you do is kick all of your income up into the higher brackets, and you get a tax benefit at the lower rates. Not a really big benefit for very high income individual, but it is some benefit, but a very good benefit if you're in a very low tax country, somewhere in Africa or somewhere in the Middle East, places of that sort, somewhere in the islands, where there are little or no income taxes. And generally that's what we do with people in places like that. However, in the United Kingdom and most of the EU, Japan, places of that sort where we have a high income tax rate, we only rely on foreign tax credits. And we get a credit to offset the foreign taxes paid to the extent that you've done work or you've earned income in the foreign country versus earning income in the United States. So there's a percentage that's computed that is applied against the U.S. income and U.S. income tax, and we compare that income tax to the income tax paid in the foreign country, and we get a deduction or against taxes, or we call it a credit, for the higher of the two. So those are the two mechanisms we use to offset double taxation. In my experience in the UK, for most of our clients, they wind up paying little or no taxes, usually no taxes on their earnings in the United States, because the UK taxes are higher than our taxes, first of all. And secondly, because they spend so much time working in the foreign jurisdiction in the UK, their tax credit limitation, as we call it, is high. So it pretty much offsets the taxes. So I think anybody moving from the United States to the United Kingdom could very well expect that, yes, you have to file a tax return. Yes, you have to report everything that you normally do as a U.S. person. Yes, you have to then do a computation of this foreign tax credit or possibly the Section 911 earned income exclusion if you elect to choose that. And so there's an added burden on the tax return. And at the end of the day, when you have a 30-page long tax return, the bottom line would be happy when it says zero. And quite often it happens that it's going to say zero in that case, which is helpful. But it keeps people like me pretty busy doing all these tax returns to get to that zero. And then again, like I said, for the people coming here to the United States from the overseas, there they have their system already in place and they have to deal with the system that's in place. Us leaving the United States and going into the UK system, we may have trusts and investments and partnerships and corporations and things of that sort that we own and bank accounts. But if they're all here in the United States doesn't care. The problem is when you get there and start setting up a checking account, that has to be reported. Then you start an investment account. That has to be reported. Then you go into a pension plan, and although you're not taxed on it or whatever, that has to be reported. If you set up a trust for your family, that has to be reported. If you set up a partnership or a corporation, that has to be reported. So as you get more involved in the foreign jurisdiction with your life and the things you do apart from your employment, you're probably going to wind up having a reporting requirement back here in the United States. And you must avoid investing in UK mutual funds, because if you do invest in UK mutual funds, those are PFICs, passive foreign investment companies, and there's a penalty unless their special elections are made in the first year that you do the investment. So the same issues apply both sides, someone coming here, someone going there, and anything ancillary to your business, your employment business, you have to take a good look at if you're going to get involved financially in any foreign financial assets out of the United States. The one last thing I should mention is we haven't talked about estate taxes. People do die. Early on, in my career many years ago, one of our clients died in Mexico, and his wife didn't know what to do, so she put him in the trunk and drove to Texas, which is kind of a radical thing to do and a little difficult to do from the UK, but it's a little easier to do from Mexico. But if you have someone that passes in a foreign jurisdiction, it may or may not be subject to local estate taxes. And clearly you do need to have estate planning done. In the UK, you're going to probably be taxed on UK assets if you own real estate there or something of that sort. If you live there for an extended period of time, you may be taxed on worldwide income. In the United States, you'll be taxed on assets that you have here in the United States, as long as you're not on a green card. But once you get on a green card, you're telling the federal government you're here indefinitely. And there's a very strong argument you then become subject to taxes on your worldwide assets. So coming here with on a B visa or H1, H1B, or an L visa, an O visa, E visa, yes, you should be very careful about what you have here in the United States and how long you're on that type of visa, because it may start to look like it's indefinite. But clearly, if anybody comes here and becomes a green card holder, they definitely have to have estate planning done. And there are some distinct differences in estate planning, the way it's done for non-US citizens, especially married non-US citizens, as it is for US citizens. So just beware that once you're there for a period of time, start thinking about estate taxes and whether or not you have any liabilities in either the UK if you're there or the US if you're here. With that, I think I've covered most of what I wanted to talk about on taxes. So I think at this point, we can open it up to questions if anybody has any questions.
Hi, welcome to my. I bumped my phone.
Yep.
Sorry,
Melissa, yeah, go ahead.
I bumped my my mouse and turned on a speaker, so I was saying sorry.
Okay. Anybody with any?
It wasn't a question. I was just apologizing for the loud burst of noise in the middle of the presentation.
That's
Sorry.
Not a
I have a
problem.
question for Ken, if I might.
Sure, Paul.
So I'm a US citizen. I'm resident here, have been for 40 years or so. I have some property in the UK. I've been paying pension contributions in the UK, and I also pay Social Security payments here. I'm getting close to retirement now. Can I draw both of those pensions?
Yeah.
And does it affect my ability? It doesn't cause me to become a UK resident, I hope.
The pension will be taxed under the treaty only in the United States, unless you take a lump sum. But if you're making periodic payments, that's okay. If you're getting insurance, UK pension from the government, that's fine. But the property that you own in the UK will be subject to UK estate taxes.
I know. You tell me about it.
That you have to deal with. And they start taxing at around £325,000, and we start taxing currently at about $13 million. So
yeah, it's an issue.
That's going to change, but yeah, that's an issue that you have. And
great.
But that's
thanks, Ken.
Classic.
Actually, I do have a question. Sorry.
Go ahead, Melissa.
Okay, just trying to make notes on your presentation. I have to say, Owen, the problems with transferring back to the United States after being in the UK for a long time are absolutely ridiculous. And trying to get taxes prepared there and all of that is extremely difficult. And if anyone is going, I would be sure that you are getting all of these problems covered under your expat status. My husband and I only went for a couple of years and we're not expats. Well, 30 years later, that was not a smart idea. So be aware it's extremely complicated and it affects every single thing you do. And also, to make it even worse, the tax years don't match. So for example, my Merrill Lynch account sends me a statement for the year. I then go download it and resort it according to date so that I can file it for the UK taxes. If they would just accept our tax year, that would even make it much easier. But all I can say is what you have described today totally rings true.
Yeah, well, everybody's on a cash basis, so it's when you get the cash is when you make the payments, except for foreign tax credits. You can't accrue those. One exception.
What's the exception?
You can accrue your foreign taxes. So if you paid taxes, if you owe taxes for a year and they're not paid until the following year, like, you do a tax return and you have a balance due, you can accrue it back to the year that it was subject, that it was due.
Mike Fisher has his hand up. I don't know if Mike, you have a question. Yeah.
Just one of the things that will happen a lot is for people coming over to the US and probably going the other way, but I'm thinking for people coming from the UK to the US, is they'll rent their house out in the UK. Now, according to the tax treaty, you don't pay tax on that income in the UK, you pay it here. But if you have a management company managing your property, which is very likely, legally they have to take 20% tax from that property for the UK government. So how does that work if you're in a tax treaty? I mean, that's going to happen to a lot of people coming over to the UK.
You're not subject to tax there. My experience is that you are subject to tax there, that under the treaty, every country maintains the ability to tax their own real estate. But if they're withholding a tax there, then you file a UK tax return to get the difference, because most rental properties you don't make money on, or you make negligible money on, not of the rents. Our rule is the gross rents in the United States are taxed at 30%, but you have to elect to treat your rental as a trade of business. And if it's a trade of business, then you get the deductions and the graduated rates. So you take a tax credit, but what you have to do is file a UK return first, pay what the real tax is, and then you get a credit in the United States for that tax. But we just went through a voluntary disclosure. The client's husband, who died and left her this pile of mess, he never reported his UK rentals here in the United States because he was reporting them there. So why does he have to report them here too? So that became a big problem for us, and we're still sorting that out with the government.
Good to know.
Any other questions? Okay, Ursula, do you have anything, any questions from you? No? Okay, well, I'd like to thank you for being here. I want to remind you that Rick McKenna, our president of Vacovec currently, is going to be sharing a artificial intelligence seminar at the Holtz International School of Business on November 13th. And if you look to the website, you'll see all the details of that program. And we are also having a Christmas party. I don't know how many have attended, but it is quite the affair at the Harvard Club. It's been going on now for 20 plus years or so. No, longer than that it's been going on, but the Harvard Club, maybe almost 20 years. And it's very festive, great occasion, a lot of wine and a lot of good songs, and really gets you into the Christmas spirit for the holidays. So I invite you all to come and join us and get a ticket, buy a table, sponsor, whatever you'd like, but we'd all like to see you there. So it's a great take.